Inflation, it's a word we hear often, but what does it really mean for our money and investments? In today's video, we'll explore the relationship between inflation and precious metals. We'll discuss why assets like gold and silver have been historically used as a hedge against inflation, and why they continue to be relevant in today's uncertain economic environment. First, let's break down inflation. Simply put, inflation refers to the rise in prices of goods and services over time. As inflation increases, each unit of currency buys fewer goods and services, reducing purchasing power. Central banks like the Federal Reserve manage inflation to keep economies stable, but factors like increased demand, supply chain disruptions, or excessive money printing can cause inflation to spike. In times of high inflation, people often look for ways to protect their wealth. This is where precious metals come in. Gold and silver in particular have been used as stores of value for thousands of years. Why? Because they are finite resources, meaning they can't be printed or artificially created. When inflation rises, paper currencies lose value, but the scarcity of gold and silver makes them retain their worth. Investors flock to precious metals during times of uncertainty, as they see them as safe havens against economic volatility. Let's take a closer look at gold. Historically, gold has been viewed as the ultimate inflation hedge. In periods of high inflation, such as during the 1970s in the United States, gold prices skyrocketed. The reason is simple. When the dollar loses value, people seek out alternatives that can maintain their purchasing power. Gold's value is less tied to any one economy or currency, making it a reliable option during inflationary times. Silver, while often overshadowed by gold, plays a similar role. It's more affordable and has a range of industrial uses, from electronics to renewable energy technologies. This makes silver more volatile than gold, but it also offers potential for larger returns when inflation spikes. In some cases, silver has even outperformed gold during inflationary periods, but does inflation always mean a rise in precious metal prices? Not necessarily. While there is a strong historical correlation, many factors influence the price of gold and silver. Interest rates, the strength of the US dollar, and overall market sentiment all play a role. For instance, when central banks raise interest rates to combat inflation, it can make other assets more attractive, reducing demand for metals. So, why should we pay attention to inflation and precious metals now? In the wake of the COVID-19 pandemic, governments around the world injected massive amounts of money into their economies. This, combined with ongoing supply chain issues and geopolitical tensions, has fueled inflation fears. While central banks are working to manage this, the long-term impacts are uncertain. As a result, many investors are turning to gold and silver as a way to hedge against this risk. To wrap things up, while no investment is foolproof, precious metals have proven themselves as reliable stores of value during inflationary times. If you're concerned about the future of your purchasing power, adding some gold or silver to your portfolio might be worth considering. As always, it's important to do your research and consult with a financial advisor before making any decisions. Thanks for watching, and remember, in times of inflation, it's not just about how much money you have, but what that money can still buy.